This is a key technical level that we've seen the yen hold for pretty much all year. Is there an expectation that we could see more haven demand given all of the geopolitical uncertainty?
Yeah, well, Heidi, there is some of that. I mean, it's also, despite a V-shaped recovery in the dollar-yen overnight, after it got a little bit, honestly, too robust in its drop, amid the Taiwan angst and also what was going on with Treasury yields, the dollar-yen is still in a pretty strong downtrend after running into a wall just under 140. So even with Fed speakers, you're talking hawkishly, you're pushing back against the idea that they're going to pivot towards a slower pace of rate hikes. The underlying concerns about the global economy haven't gone away. In fact, commodities, for example, have dropped back over the last couple of days to emphasize those slowdown fears. And as long as those global slowdown fears remain strong, the dollar-yen is going to be on a weakening trend, i.e. the yen is going to test that 130 level at least a couple of times in the coming months, I would argue.
So what are you watching, Garfield, at the open today, given the huge reversal in risk sentiment that we saw in the New York session?
Yeah, well, it's a tricky one. I think Asia in general might take a more broadly risk-on tone. The rumors of what Pelosi's visit to Taiwan would result in are so far proving to be spookier than the facts. She visited, the world hasn't ended, China is reading from its existing playbook about its responses. So with all of that, you could expect a little bit of relief, and that might help to set off some gains in Asian risk assets because they're less worried perhaps about this back and forth with Treasury yields.